Hey everyone, Chris Haddon and Jason Balin here with the Private Lenders Podcast, as always sponsored by hardmoneymastermind.com. You can go anytime, get a free account, join the conversation, check out hardmoneymastermind.com. Special guest today, Rodney Miller from Hard Money Partner in Oklahoma. Rodney is a private lender, real estate investor, and business owner. Thanks for being with us, Rodney.
Hey, thanks for having me on. This is exciting.
Yeah, no, it should be a good conversation. Like we originally connected probably about a year and a half ago, maybe 15 months ago, around there.
I found you guys several years ago. Just I'm a slow starter, so yeah.
But obviously you have a lot of real estate background, business ownership, and wanted to get into private lending. Like, if you wouldn't mind, for everyone listening or watching, could you break down some of your past in business and kind of what led you into this niche?
Sure. So I own medical clinics. I'm not a doctor, but I bought a medical clinic in '94 and grew it to 4 clinics. That's kind of my main gig, but got into real estate about 2003 because I didn't really have a retirement plan or anything like that. So I was one of the first Homebester franchisees here in Oklahoma. Bought and flipped a bunch of houses, went through the house deal, accumulated a bunch of rental properties, was a wholesaler for a while and all that. Recently got into syndicating apartment deals. So that's kind of what I've been doing the last few years, doing apartment syndications. But I've always loaned money here and there, a little bit here and there, and played around with it. Really enjoyed it. Bought a few notes and mortgages. Decided to get serious about it a few years ago. And that's when I looked you guys up, because I was, I didn't really have a process or anything like that. But really that was going to be my retirement plan. I wanted to retire, sell the clinics off, and someday just loan money, maybe move to Florida and try to get 2 or 3 states and get really good at loaning money. And, a wise man told me many years ago, he said, the guys that got rich during the gold rush were the guys that sold the shovels. Well,
right.
When all this craziness is going on in real estate, people are paying all this crazy money for it, and and it's harder to find deals. It's just easier to loan money. I found that loaning money, it inserts you into the deal. People are chasing the deals for you, bringing them to you, and you get to be in the middle of the deal and take a nice, chunk of the deal. And it has proven to be that way. It's been a great shift. I've bought a house in 2 or 3 years. The multifamily stuff, I got partners. That didn't take a lot of my time, but really want to put more focus on the lending business. And that's why I found you guys. Want to learn the processes, learn how to scale and get bigger and do it the right way. And that's my path to the future. Someday I'm going to sell all this other stuff off and just loan money. And it's fun. I like it.
Our history, definitely, we have a lot in common with some of those things that we've tried over the years, like flipping. We've owned a number of rentals, and we actually just got done selling our single family rentals, and we transitioned into more of the same kind of thing, like a not the active manager of properties like multifamily, office, and self-storage we've done, but on the equity side, right? So you come in for a certain amount of ownership, invest in the deals without having to manage them ourselves, which, from flipping and single family rentals, it's a grind. Like, some people are really good at it. Like, some of our clients, our borrower clients, are really good at that stuff. It just wasn't, we weren't probably not the best use of our skill set, and just not what we enjoyed as much. Like, did you have some of those same experiences along the way?
Yeah. I really enjoyed it. The first 10 years I did it, I was running around looking at houses, just checking on contractors, running to Home Depot. It was a blast. I loved it. It was fun. Kept me out of the office. But then it just became a grind, and it just saw there's a better way to make money and a better use of my time. And I guess you get older, you just want to be more passive. You don't want to run your ass off all the time. And so I started looking at other avenues to hopefully make the same amount of money with less, or more money with less effort. And so I guess you get older and wiser, you start looking for different ways to do things. But
yeah, I think a lot of people transition into that exact same approach. Maybe we should talk about your first deal as a lender. That's always a kind of a fun story. I don't know if you remember the first deal as a lender that you did, but potentially how you found it, maybe how you funded it. Was it a good deal? Was it a bad deal? I mean, I'll tell you that our first deal that we did was in Indiana, which isn't a state that we would lend in and never have lent there since. It was just, we didn't know better. Right. So,
Sure.
everyone always has these funny kind of first deal stories. And, curious if you remember some details on yours.
I don't remember my first. I've made little loans to other real estate investor buddies of mine and stuff like that. But what I do remember is my dad is 81 and he retired a long time ago, and he was looking for a way to use his money. So the thing that kind of got me interested is he started loaning me money here in Oklahoma. He's in Dallas. And, I was paying him 10, 12% or whatever. And then, I made the mistake of introducing some of my other real estate investor buddies, and so he started charging 15% for 6 months. If you paid it off in 4, you still owed him 15%. So he was,
Yeah, it's pretty healthy.
So he stopped loaning to me because I'm going to pay him that. And then he got tired of coming to Oklahoma. So I was like, well, all you got to do is make some cards and go pass them out in Dallas. And so he went and did that. And he's been killing it ever since, man. And
still lending too.
Well, he's 81 now. This is probably his mid 70s.
Okay.
He started slowing down. And so now I'm selling him loans at 10%. I got the mortgage software to where we can fractionalize loans. And so now he's gotten to where he can't, he's not really wanting to chase down deals and deal with the day-to-day, because this is job. It's work. It's not passive. And so he wants more passive. So he's just recently started buying loans from me at 10%, and he loves it. I'd collect for him and all that. So it's gotten really easy for him. So
yeah.
Sounds like a lot of our capital investors too.
Yeah. The ease of him transitioning into that, he had no background in real estate. He had no background in, he never flipped a house or anything like that, but he started loaning to me, and it went so smooth. He started going for the big dollars. So, that kind of, I thought that was kind of cool.
Yeah. Okay. So like circling back on Jason's question, but fast forwarding a little bit, like since you've, in essence, like revisited lending and started to put more of an emphasis on it. And like, obviously you have a big plan for the future. Do you remember one or two of those deals? Like when you kind of restarted, like, okay, I'm going to dive into this hard money lending thing in the past year, 18 months, whatever it was. Can you do a breakdown on one or two of those deals, the more recent ones?
Yeah. I've done some little fix and flip loans around here. Those are fun. They're easy to do because you can comp them out and everything. And when I was doing it before, I didn't make them have much skin in the game. I guess, things were rocking and rolling. I wasn't worried about everything, but I know other lenders that got in a lot of trouble from doing that after 2000. Mm-hmm. So I knew better. I guess what you guys taught me is to be more conservative. Now people got to bring, like, I had no problem being all in on the loan with nobody bringing anything to the table. Now I'm not like that. So every loan I do, I'm following your template to a T. They've got to bring 25% fees up front. I make them have skin in the game, and that weeds out a lot of people. A lot of people don't have that, but I'm trying to be more particular about who I loan to and what I do. But so I've done, I did a fix and flip loan in Lawton, which is an hour from here. I've got a buddy of mine that's a really savvy fix and flipper. He knows his stuff. So what I do now, and I've got Patty, my office manager. She manages my clinics, but now she's my administrator for my loans. So, the first deal we did, you guys turned me on to a good attorney to do all the paperwork. So basically what I do is I underwrite the loan. I talk to the person, I get all the details. And once they're ready to rock, put in the spreadsheet, once we're ready to rock and roll, I turn it over to Patty. She handles all the admin stuff. My buddy, I take the $400 loan valuation fee, give it to him. He runs out there, looks at the property, goes over the repair budget with them, make sure that they're on target for that, divides it up into 2 or 3 draws if need be, and he does all the draw work. So basically my initial upfront work is done pretty quickly, and then I turn it over to everybody else.
Perfect.
Yeah,
that's perfect. That is the system right there.
Yeah. And that's what it's supposed to be, because you can turn this active business into not all that active work. Right. And that's kind of, because I work a lot of front end stuff, and by the time we're committing to loan somebody money, right? Like we're this isn't like reviewing applications like mortgage brokers. We're not doing any of that. Get on the phone,
Sure.
ask the right questions, spend some time figuring if, they have good characteristics, if they have good collateral, and, commit to a loan amount that works verbally, right? Like we don't put anything on paper for anybody until they verbally tell us it's good, right? Because it takes time, right? There's no point to do that. So very similar situation. And if it works, it's like, great. Patty in my office will reach out to you. She'll get these particular documents. We'll go to close, and it'll be a simple process. And, you take what normally would be a little bit more of a kind of a hassle and a longer term process, and you condense it and make it easy. And borrowers like that too, because they're used to something a heck of a lot more sophisticated. How do I make an application? It's like, let's just talk on the phone and let's see if there's anything there anyways. Because if you don't have the down payment money and you don't know what you're doing anyways, it's not going to work. So, and also just to chime in a little bit, what you talked about giving higher leverage kind of back in the day, the market's very different than it was years ago. I mean, we started lending 15 years ago. Chris and I owned properties, another 5 to 8 years before that, but you were even before that, right? So you've seen different market cycles as we have. And, in the early days, when the market was, the market's up here right now. And I'm sure it's in Oklahoma City, it's up there as well. So for the most part, real estate investors aren't even buying properties at investor prices. They're paying above retail. So if you give somebody 100% financing, chances are you're into this thing at 120% on day one anyways. So it doesn't make sense. You can't do that. It also has helped that the institutional backed lenders are making their loans are typically 80% of purchase, 100% of construction, which back out to similar to where you and us, us and you are lending as well. So it's not like sticker shock for anybody either. But the days are different. Like you used to be able to get 100% financing. And I'm not saying that doesn't exist now, but it's rare. I mean, there's people out there that are buying a property at 100 grand, maybe that are worth 150 on day one, right now. It doesn't happen often, but like it could. And, you can get creative to figure out what makes the most sense. So, it's interesting. It's great talking to different private lenders throughout different areas of the country because we all see the same stuff, right? We might be in different markets, but it's all it's all similar. And
I wouldn't know that. I only see my little pond, my little, area here I play in. So that's good to know that's kind of similar across the board.
Everyone's kind of lined up the same way. And obviously, I don't have a crystal ball, but I would guess that everyone who's set up like our operation, like your operation, like some other private lenders operation that we all know, I think are really going to come out and really blow up and expand in the future as these institutional backed lenders kind of just, go away. And I mean, we've seen signs for it. We obviously saw it when COVID hit, but like they all went away overnight, right? And all of us were the only game in town. And that will probably continue to happen as things come. I mean, we see a lot of loans where, they got turned down last minute because an appraisal came in lower or something happened, right, with an institutional backed lender. And, they got to utilize us for our services. And, hopefully in the future, we can up our interest rates again too and go a little bit higher.
That'd be nice. I think you're right. I think I'm kind of feel like I'm positioning myself for, I was around there in 2008 when everything slowed down and the banks just cut everybody off. And so I see that could happen again, at some point. So I think that where money is cheap and easy right now, it's starting to turn. You can see it. I mean, it's slowly starting to get a little more difficult, and I don't know. And it feels weird right now, even loaning 65 cents on the dollar for these overinflated prices, you feel a little nervous even about that.
You're exactly. Like you have to do it. Like that's best case scenario. You're right. Because if you're overpaying for it, the metrics only works if you're basing it on if you're raising it on the right numbers. I mean, there's lots of loans that we do where, and people might think this is insane, but like we're doing a loan of 150 grand and the borrower is bringing $100,000 to the table. And, that's just where the numbers shake out. And it is what it is. And, you keep trying to find more opportunities to until the right ones hit. And
sure. And I was telling you, marijuana became legal here about 3 years ago, I think, a few years ago, maybe it's longer than that, but people are buying up land with buildings around here like freaking crazy, coming from California, and they're all starting these grow operations, and land's inflating like crazy. So we on land, I've done several bigger deals for land with a building, and we'll do 50% on those deals. So we'll do 50% of
The land value.
Yeah, of the land value. We need a structure on it though. And a lot of these guys are coming in and they're adding buildings to it, metal buildings, greenhouses. They're improving the land too. So that's kind of a big, that's a kind of a cool deal. But that's some of my latest stuff. I've done 3 big grow operation land deals. And I told the realtor one time, the first deal I did, I told the realtor, I'll do these all day long. They'll bring 50%. And boy, she's opened up the pipeline. So I'm like the go-to guy for.
And that's 50% of the purchase price?
Yes.
Oh, that's perfect. Yeah, that is the right number for that kind of deal. And the loan to cost model, I mean, it does a lot of your valuation for you, right?
Yeah.
Because somebody's already literally paying that amount.
Yeah.
That's
And
a
these
good
guys
niche. I
can't
like
get,
that.
they can't find banks. The banks won't loan on this stuff. So it's even, I mean, they're happy to pay the higher interest rate. So
Real quick question. What have you done? Like, how do you underwrite the exit strategy? Are you doing a longer term loan, or, because they won't be able to get a bank loan, obviously, to refinance it. So are you been doing like longer term amortized loans, or are you still doing them at a year and then let them kind of figure it out?
that's what I'm doing. I'm doing a year. I'm telling them there's a year out, but if you can't get out, we'll talk about it. And maybe you can pay the points again, and maybe, okay, as long as you're current on your payments,
Yeah.
we'll
Modify.
Yeah. So that's
Yeah,
basically.
we would do the same. We would do the same thing. I mean, if they're current on payments and there's just not an easy exit strategy, like that's the right move. Like there's no reason to get into any kind of default discussions or anything.
Sure, exactly. And a lot of these guys, they say, hey, once we're producing, it takes I think it takes 4 months to get your first crop going and all that. We can find private investors to take you out. We just got to get our EBIT up there. So it is riskier. That's why, it is a business model that could be risky, but that's why we do 50% of the of the purchase price and the value.
Yeah, I mean, I think like we were talking about positioning before, and that feeds right into that, right? Like people are out there in your local market knowing that you're lending private money on sometimes out of the box deals, sometimes not even that much outside the box. And that builds over time, like a referral source, like an agent, repeat borrowers who are doing houses, for example. And when we were talking about positioning a few minutes ago, I think that's the exact right move. And we've been saying some of this stuff in the mastermind group recently, that get your game together now, right? Get your game together now in terms of like your base of capital and a list, whatever kind of methods you can use to get the word out there that you're going to be lending money now and later when stuff changes. When stuff changes, like the Fed's already announcing that they're going to be hiking the short-term rates, which is going to directly affect our competition that uses that kind of money, right?
Sure.
At the same time, the housing market's cooling, which might make that smart money be like, all right, maybe residential real estate in the US isn't where we're going to be for the next 5 years. So the positioning of everything. And it doesn't happen overnight, right? Like certain stuff could happen overnight if related to some of those capital sources, but just letting people know in the different methods that you can, online, offline, that here's what you're doing and you're going to be around is really where people can capitalize. Like from now into the next few years, like great place to be.
Sure. And I got to tell you, I'm trying to get all my ducks in a row. I didn't just want to learn how to make loans. I want to really learn how to sell the loans. So I'm not hampered by my ability to make the loans. That makes sense. I want to be able to sell them off so I can, increase my volume and all that. I'm not sitting on millions and millions of dollars. So
sure, no. And when you say sell them off,
you got to learn all that. How do you sell the loan? Get the word out there that you can, you can sell people really safe investments, and you'll be partners with them on the deals. That's always a sweet, when you tell somebody, hey, I got a $200,000 loan here, I'll sell you half of it. We'll stay I'll stay in it with you,
right?
Trust
Easy
that.
sell.
So I've been kind of putting feelers out there and talking to people. I've sold a few, so I went through the whole process of the paperwork and mortgage office made that real easy. You guys told me about mortgage office. So I think you need to be ready. Like you said, get ready for what's coming, and it probably is coming here pretty soon. So yeah,
for sure. And just to clarify for people listening or watching, like when Rodney's saying selling notes, he doesn't mean selling it off into the secondary market, right, of institutional money, like a lot of hard money type companies are doing now. You mean, fractionalized investing, like you're co-lending, like you can use a bunch of different terms, but co-lending with your other people. Maybe you keep 20% and like sell off 80% to someone else, which is exactly the way we've been running HMB forever, right, since the beginning.
Sure. Yeah, these are friends and family.
Exactly.
These are investors that want out of the stock market, that just want a safe place to put their money. And so this is a good way for them to invest in real estate out all the hassles, basically. So,
and in my opinion, now is a good time to make sure most hard money lenders have their capital investors in place, because when markets change, investors are going to get scared, right? They're not going to know what to do. If you have a track record with them and you've done a deal with them, you're co-investing with them, they've seen a good return from you over the years. They're gonna be like, okay, these guys know what they're doing. Rodney knows what he's doing. Let's continue to stick to the plan and do it that way. When we started raising capital, everything, stock market just crashed. It was hard when we were raising capital from the beginning. It's 15, 08, starting in 07, 08, like it was tough then because everything was a mess. Real estate was down. I mean, it was the best time to invest in real estate then, right? But that being said,
it didn't seem like it. It didn't feel like it.
It didn't seem like that. And now there's a lot more education related to investing in these types of notes. In general, which there wasn't back then either. And we were trying to, trying to teach and figure out, and we were young punks that didn't really have much of our own capital when we started anyways. So it was tough. So the point being that this is a good time to do it, right? You're not going to wait till everything crashes and on the news, you're going to say real estate, sell, real estate sucks, get out immediately, right? It's going to be hard to raise capital then. Now's the time to raise capital, create your infrastructure, put things in place, knowing that you can just ramp up as needed. So
yeah, I can tell you it's a lot easier because I raise capital for all these large multifamily deals too. So, I can tell you selling notes is easier, or selling fractionalized, parts of these notes is a lot easier to sell and easier to explain than raising capital for a multi-million-dollar deal with a capital stack. And here's what your return is going to be in a waterfall and, all this stuff.
Right.
It's like, hey, I loaned on this house. You can go touch it, go drive by it. I'm going to stay in it and I'll sell you whatever you want. You can buy the whole thing, you buy part of it, and I will, here's the equity you've got in it. It's easy to explain to them and it makes sense to them. So,
yeah, no, I totally agree with that, because we do some equity and syndication type stuff as well. And it's just there's more speculation to that, right? Like you'll get a pref and then your upside might be X or might not, and hopefully and when, there's just some question marks there, as opposed to raising money for private notes. There are many question marks. Like, here's a note rate, here's your rate of return, here's a term. People can default and stuff, but there's not that much that can happen. Like, it's pretty predictable. And especially
that, but also, hey, we're going to do a value add on this, 200 unit apartment complex. We're not going to pay dividends for 6 months. Then, you should expect a 6% going up to 8 to 10% in the second year. This is like, hey, you invest in this and you're going to start getting checks immediately. There's no delay. The cash flow is consistent. You're going to be getting checks. I mean, it's just an easier concept for people to grasp.
It really is. And anybody who has some kind of investable capital, they need deals. Like, I think a lot of newer lenders are under the impression that raising capital is really hard. And I mean, if you put the reps in and you have a few contacts that turn into a few more contacts, it's really not, because people with investable money need deals and they typically don't have the deals. Like the example that you gave earlier with your father, like he knows exactly how it works. A 10% return is great. He doesn't feel like sourcing deals and underwriting them and working leads and stuff like that. And most people don't have access to the kind of deals that we do because we work this full time, right?
Sure.
I mean, people hit me up daily, like our active capital investors and maybe referrals and, hey, can I get in? And like, you get to a point where that lead flow, not the lead flow, there's always a ton of leads, but the actual quality deals that are going to close, the capital outgrows it, especially after being in the game for a while. And even if you aren't taking on new people, just their capital as it grows outpaces how much your hard money company can grow after 10, 12, more years. So I think people have the wrong impression about that they think like, oh, I can't lend money because where would I get the money? And
Let me tell you something. Ask anybody right now if they're comfortable being in the stock market. And I guarantee you 9 times out of 10, they're going to tell you, hell no. People are looking for places to put money that's safe. And real estate is probably one of the safer places. I guess you put Bitcoin. I mean, you can put it in the bank, but I don't put my money in the bank. I want it out there tied up in real estate or something. But with inflation hit, the way it's going, I don't think inflation's slowing down anytime soon. I think you want your money in tangible assets, and this is the best way to get it out there. But people aren't comfortable with their options these days. So all you got to do is show them another option. And
for sure.
It makes sense.
Mm-hmm. Okay. So that being said, and even without any crazy changes in the market, like we were talking about, could possibly happen. Like say things stay pretty, status quo for the next like year or two, where would you want your private lending business to be in that amount of time, 12, 24 months?
I'd be happy if I had 10 million out on the street. 10 million.
It's a good number. And you already have a few million outstanding now.
I think I might have be right under 2 million, but I haven't really, like I was talking to you guys before this, that I've been really lazy about it. I've been working on my other businesses, and I haven't really gone and promoted, handled any cards or I'm doing, my YouTube channel, but that's basically it. So 2022, I was really working on my systems. So you guys gave me a lot of systems to work. I got the mortgage office set up, sold a few notes so I could go through the whole process and really working on getting good at what we do before we really go out there and bust it loose. But 2022 is going to be my year of really promoting and going after the business. So I think it's very doable, especially if things start getting, funky with the institutional lenders, the out-of-state guys. 2008, you said it's a slow process. 2008 wasn't slow at all. It was like that. They were lending one day, they were lending, in a matter of a few weeks, everything just stopped. And people were looking for options.
Yeah, that's true.
So,
it's COVID. It was the same thing as COVID, and that's real life what happened last year.
Yeah.
So
that was like a 6 weeks where the spigots got completely turned off for them.
Completely turned off. Every single company.
And I was going to run something else is really crazy going on here. I don't know if it's going on your area, is that they're passing new wholesaling laws to where these wholesalers can't tie up a property without taking ownership of it and sell it to somebody else. So I'm working on a product for that, being the middleman, so where they can, if they bring significant equity to the table, we can get in the middle of it, help them take it down and then resell it.
I mean, so they'd hold it for a longer period of time, or would they just take ownership like a double closing as like a simultaneously closing?
Double closing if everything went right. Yeah.
Well, because you could do a double closing, and that's, you could keep it all cheaper. It's less safe, or it's safer for you, right? There's other, there's other things to take into consideration, but if it's a true A to B, B to C transaction, you can set up some sort of just straight like escrow agreement. It's unfortunate because back in the day it was easy because title companies were okay with doing it that way, right? It didn't matter, right? But now they need to get a wire. It needs to be more, but but again, it depends. Like you got to underwrite the B2C to see who they're using. If they're using a bank money, it's not going to work as a simultaneous transaction.
I don't want to get off, but that's something we're looking at because it's happened in Arkansas. It's going to go into effect November 1st here in Oklahoma. A lot of states, I think Illinois, a lot of states are moving to that no wholesaling deals. So there's got to be an opportunity there. I don't know what it is.
Interesting. Like I didn't know that was happening in so many states. Like correct me if I'm wrong, Jason, but like we've heard rumors about like no wholesaling laws coming into play in the Mid-Atlantic, the markets where we operate, for example, for years. Like I've heard those rumors since we started in real estate, and it kind of never happened.
Really?
Yeah.
I know Arkansas is out of us. I know Illinois is, and ours goes into effect November 1st.
So what happens in that case? They can't market the property until they're the owner of it. Cause like right now they all claim, well, I'm the equitable owner of it. So like technically I can still do what I want and market it. So can they not, in this case, can you even do a double closing? with these, or you wouldn't even really be able to do that, right? Because are they not
I
able to
think
even?
it boils down to it. They either have to be a realtor, which I don't even know if that's going to work, but they have to either be a realtor and disclose what they're doing with this property, which is, that's going to turn a lot of people off and they're not going to want to do it. Or they've got to take title of the property
First. Yeah. There'll be ways, as soon as it passes, and there'll be ways to monetize it, obviously, just like everything else.
Yeah.
It's just a matter of kind of figuring out. Yeah. I mean, I've heard, we do a lot of loans for some really large wholesalers for their clients. And those numbers are big out here. They're, $500,000 deals with $75,000 wholesale fees, right? So I mean, they have a lot to lose, and these guys are spending millions of dollars between TV and direct mail and things like that. So, and there's a lot of these companies that do that. So, they mentioned a term to me for because we do loans in Pennsylvania as well. That they were passing a law in Pennsylvania that sounds similar to what they're passing there, but it hasn't really affected us yet. So I'm not sure.
Yeah, they say they're going to start off real generalized, and they're going to start narrowing it's the Oklahoma Real Estate Commission. And I know one of the guys on the board there, that it'll start off generalized and then they'll start closing the loopholes,
Sure.
slowly. But I don't know. Who knows?
And then who knows? The market might, go in a different direction, and then they've got other things to worry about anyways. Right.
That's true.
Also a good point. Also a good point.
Like, who knows? I mean, there's, when the industry gets big and it's got to get regulated, similar to private lending, right? Like private lending, it's not all that regulated, but there's definitely states that have licensing requirements and things like that did not have that years back. Sure. And that was always kind of one fear that I had as all these institutional back lenders came into the mix is, you guys are taking something that like, hey, we all just want to deploy, tens of millions of dollars a year and be happy, right? Like, your guys are trying to deploy $1 billion a year. Like, get out of here. Like, you're going to make things get regulated because you're trying to just bombard it. Like, just leave all the little guys alone type of situation.
Yeah, exactly. So I just got a text, got a potential cannabis borrower for you. Got a sec to chat.
Perfect.
That's a broker I had lunch with last week that I told him when I was doing it. So.
Perfect. Nice niche.
I need to get out there and I need to spread the word. So,
well, I mean, that spreads the word real easy because I'm sure you're the only game in town or close to it when it comes to that.
Cannabis, I think, there might be another couple people, but it's so far it's been pretty good.
Yeah, no, I can totally see your operation in the next year to two snowballing in a really good direction. And it doesn't have to be like a huge mass marketing campaign, like big ad spend. Like it doesn't, especially once you start getting in the residential space anyway, you get a lot of repeat borrowers, right? So you stack up a few of those, like, okay, all of a sudden you're getting loans that you basically earned a year or two ago by making the connection, doing a deal.
Sure.
You're getting another one every quarter from those people, right? So it kind of like snowballs on its own. It's one of the great parts about, especially the investment residential part of private lending. I think in the commercial stuff, you don't see quite as many repeat borrowers, but it'll snowball. I could totally see you pushing that up quarter by quarter.
I have a few of those now, man. If you treat somebody right, you move fast, you don't stuck, and you do what you say you're going to do, man. That's all you got to do, man. These days, you got to be easy to deal with. You got to be quick and responsive.
That's right.
And
the quick and response,
close on time, draws on time. Like you're gonna have some happy clients out there.
Yeah, I mean, if we went through our pipeline of like every loan we're closing this month or this past month or whenever, I mean, they're like, we try to track like day, originated, day committed, day closed. I mean, they're all within a week. They're all very, very. I mean, there's sometimes that deals come into the mix that have to close at a longer period of time. They don't need to, right? Like. But like I had a guy that has to close on the 29th, and I'm like, listen, we can move forward right now if you want, and we'll just go, or just hit me up on the 20th, or hit me up in a few weeks, because like when it's go time, it's go time. Like we're used to it. I mean, there's, we had a deal that was waiting for the auction to get ratified. It just got ratified. He hit me up, and he's like, hey, can we close tomorrow? Like I haven't heard from him in a month. Can we close tomorrow? And like if I wanted to push it, we could, but we have a pretty big week. So I'm like, do you mind if we can close Monday? Like it would make my life a little bit easier. And he's like, yeah, that's fine. But like, that's what he, like, that's That's fine. Like that's how it goes. And there's endless deals. I mean, I would say 80% of the deals that we do, and probably you do, have to close very, very quickly. So there's no other option. You're paying for speed. And then as soon as you get that, word spreads quick from the realtor, from the title company, from whoever. It's like, how did you guys even close that this quick? It's like, because, we have our ducks in a row, right? And, private lenders need to have their ducks in a row with it. And it just makes it easier. And if it's a newer private lender, hard money lender, they don't have all the capital back. And I get it. Like, you're not gonna be able to close it in a short period of time, but set proper expectations with whatever that is. And one of the brokers that we're good friends with that sends us a good bit of deals, he gives his clients two options. It's like, you can use hard money bankers and we can close within a week, and you're going to be at 13-3, and it's going to be a really, really easy transaction. And I don't even need to get much in, it's going to be very easy. Or we can close with, this lender, it's an institutional backed lender. It's going to be 40 days. And these are all the things that you need. And it's going to be a lot cheaper in ways. Instead of 13-3, it's going to be 8.5-1 or 9-2 or something like that. But let's look at the difference in costs, right? It's going to cost you, and especially on smaller deals, it's so much more minimal, compared to the bigger deals. But, on a $100,000 deal, hey, it's going to cost you an extra, whatever, $4,000 to use them. And it could be the difference between closing the deal, doing the deal, and not. So.
Exactly. Yeah. I mean, the guy that just sent me that text, the discussion we had, he goes, well, I got, cause he's a broker and he does all commercial, but he's like, yeah, man, it's going to be 30, 40 days before these guys can close. I'll definitely send them to you if there's a hurry, and we'll, he wants some points and stuff like that. No problem. We'll work with you.
Mm-hmm.
So, but it makes sense. I love my favorite question to answer is, well, when can we close this? I've got 30 days. I'm like, well, is the tie work ready? Yeah. Today, tomorrow? I don't know. We can close as soon as you want.
After that.
And they're like, what, really? Well, how about an appraisal? And I was like, that's Rex. He'll be out there same day, man. Just give me $400 and we'll send them out. We're ready to go, man. So
that's how we do it as well. It's the same setup. It's great. And like, that's how it's got to be run. And, you can't even, if someone's listening to this and they're just starting out and you don't have the full capital back and you don't have all your ducks in a row, that's fine. Like give yourself more time. The last thing you want to do is commit to close something in 3 days and you can't perform. It's the last time you'll ever get a deal from that person or anyone else they know. That's a no-no. If it's got to be 2 weeks, do it 2 weeks, whatever it's got to be. The point is after you have a well-oiled machine, you strive to get this well-oiled machine. You can go out there and be like, go to your meetup groups, go to realtor office, go wherever. People will know, like, call these guys, they'll move quick, and you do it. Word spreads very, very, very quickly in a good way. I mean, every other call, hey, someone said they, hey, I heard you helped them out, or you helped them out, or you helped them out. And then you just think that's the game. That's how it works. And, that's how we all get a lot of deals. Not because, people have this preconceived notion that we're doing subprime deals, and that's just not the case, right? We're not doing, crappy deals. Maybe there's deals where the borrower's credit scores aren't that great, but if they are, guess what? They're bringing more cash into the deal. So I have a better collateral position, right? It's not subprime deals. We're doing quick deals for real estate investors. I think after people can recognize that, it's an interesting concept, interesting business model.
Yeah, totally. I mean, there's a lot of opportunity. Yeah, it's a great business model. There's a lot of opportunity for those who are prepared, right? So I think that's kind of seems to be the theme of this podcast today is like, get ready, right? If you can get yourself ready, there's going to be a lot of opportunity to make good money in this great niche.
We're talking about that. I have a bunch of rental properties, and to get ready, I went and, I was going to sell them all off. I was like, I'll just, they're all full. They're all, the rents are going up on them. So I went to my banker, and like 28 properties, I was able to pull, 7 figures out of them, set on the sideline alone,
Nice.
It gives me good money to churn and then resell and churn and resell and turn, So I didn't start with that. I just started with the smaller amount. But if you've got some money to work with and then some back end guys to sell them to, I think you can leverage and grow pretty fast. You got to set all that up.
Dude,
yeah, no, that's a creative way to do it. I like that. I totally like that. Yeah, we know some private lender friends here locally that they run a lot of their operation that same manner. They get their liquidity from properties they own lend it out, make the arbitrage. It's an easy game.
Think about this. I got a 15-year AM, 10-year fixed, 4% interest. I mean,
It's a no-brainer. It's a
It's a
no-brainer.
no-brainer.
It's a
Yeah, so-
no-brainer. Yeah. So we, like Chris said, when earlier, we had about 20 rentals, and they're all gone as of this year. They're all
smart. That's smart, man, probably.
they're all gone. I mean, number one, they all sold for a lot more than we'd ever expected to begin with because of the market. But we're not good rental property operators. We're good at hard money lending. Like, that's what we're good at. We weren't good operators. We have a full-time employee that was managing them in our office. We weren't great on them. We're like, let's take the chips off the table and invest into hard money loans. Like, that's like what we do with all of our capital. So
those are my babies. I can't let them go, man.
I know. I get.
No, you don't have to.
You should.
You don't have to.
You're accomplishing both things. You still have them. You have the cash flow. Plus, you levered up on them in order to get the money out for funding. Anyways, it's a beautiful thing.
We only following the philosophy of lending. We only pulled 60 cents on the dollar out of them. So we're not like highly leveraged. So
Yeah,
For sure.
But
yeah. No.
I spent so much time acquiring those rentals. I just it's a block I have. I can't let them go. I probably should just get rid of them. But anyway.
No, you shouldn't. I mean, if you're into them, and I know a lot of good operators that have it. It just wasn't for us. It's just not a good fit. And it gave us the ability. It gave us the ability to, invest in some larger self-storage projects and some big commercial projects and a bunch of apartment buildings. So as far as, we kind of just we traded up into another asset class, and now, we don't have to monitor them, and they're a pain in the neck. And who knows, maybe we'll buy them back at, 50 cents on the dollar in the future. Not against doing that. Not against doing that either. But for us, it was a good move. But most people think we're crazy. But also, the beauty of owning hard money lending companies is you have an investment vehicle. Most people don't have investment vehicles, especially people with real high net worth. I mean, we deploy close to $40 million this year, right? Like, I don't have $40 million, meaning we have unlimited money to continue to put in. So, we take, it's tough to put capital into other investments that aren't going to perform the way that these are, right? So we might as well take that capital and put it in there. Now, obviously you can't leverage it like you can leverage a piece of real estate you own, but that's always an interesting conversation, especially when we invest in syndications and, some of these other facilities. We've been doing a lot of self-storage stuff lately. You got to see if it makes sense. It's, hey, we can put our capital in a passive hard money loan and, spit out this return. It's hard to get into other deals that have, that can outperform that.
No, absolutely.
Yeah, no, good stuff for sure. Yeah, definitely looking forward to seeing your growth trajectory here, especially with a potential upcoming market change and everything else, and kind of just the natural snowball of this whole niche. So yeah, we really appreciate you taking the time, Rodney. Yeah,
man, really, just a shout out to you guys. You guys showed me really how to do this right, and that how to scale. I couldn't have scaled it unless I went through your course and kind of learned how to put all the pieces of the puzzle together, the connections I made with the legal aspect of it, and just and the software, and just everything that the little nuances that I didn't know made a big impact. So good stuff, man. And I really think that's going to be my future once I get out there and really put work into marketing it and stuff like that. But it's a good business. I can't think of a better business. You're helping people get a good return on their money. You're helping real estate investors. You get to be in the middle of all the action with the real estate investing world without having to get your hands dirty. It's a cool thing all around. So
it is a great niche. And yeah, thanks for saying that. I appreciate the compliment on the training and the mastermind and everything else. And before we wrap up, like, where can people find you and your company?
You can, my company is Hard Money Partner. You can look at the website. I have a YouTube channel, Hard Money Partner, the Hard Money Partner Show on YouTube. Love to get more people on that. So we just interview local real estate investors in Tulsa and Oklahoma City, talk about what's going on here. But it kind of apply to anywhere in the country, basically. Rodney Miller at pobox.com is my email. So reach out to me if you have any questions.
Good deal. Thanks again. I definitely will check out that the YouTube show as well. Maybe get some more ideas for our own content. Yeah, thanks again for being with us. Everyone, thanks for watching or listening. And remember to go check out a free account at hardmoneymastermind.com. And we'll see you next time on the Private Lenders Podcast.
Thanks.